Hi everyone, in this video I'll be going over why you should invest in the stock market. And I know what you're thinking, stocks are risky, you could lose money. That's true. There's definitely risk involved and you could potentially lose money. However, over the long term, and I want to emphasize the long term, stocks have proven to generate a nice return on investment. So I'm going to be focusing on big tech companies. So Apple, Microsoft, Amazon, and Google. And I'm choosing these companies because one, I think they'll be around forever. They have a massive cash reserve. And they've proven to be winners over time. So let's begin with Apple. So let's say you invested $10,000 in Apple at the beginning of 2008. So the purchase price was $198.08. You invested $10,000 and you purchased roughly 50 shares. So as we know, at the end of 2008, the financial crisis, though that stock that you purchased is now worth $85.35 a share, you just lost 57% of your investment. So what was worth $10,000 is now worth $4,309 roughly. And this is what happens with stocks. People panic, they start selling off. And if you were a first-time investor, you might think, oh my God, I just lost almost $6,000. Why did I invest? I knew I shouldn't have invested. Believe me, I went through this myself. But what I want to show you is that over time, stocks do recover and you do make money. So for those that ended up selling their shares, I mean, this is just the ending price. So it was between $198 and $85.35. So some people may have sold for 100, 120, whatever the case, they lost money. In this example, had we sold our shares at the end of the year, we would have lost $5,700 almost. But had we just held our shares until the following year, so if we held them until 2009, we actually would have made 6%. So $638.73, which obviously isn't a whole lot, but we still made back all the money that we lost in just 1 year and had a 6% gain. And had we held for 2 years, so at the end of 2010, we would have made $16,284 or a 63% return. So roughly $6,284 because we invested $10,000. And this is what I want to show everyone, that over time, stocks do make good money. Now it might not always be this much, like at the end of 2019. So if someone just put $10,000 into Apple at the beginning of 2008, in 2019, that same person would add $102,770.50. So $100,000 with just $10,000 invested. And that's what I want to show everyone. That is the potential of the stock market. That is the potential of good value stocks. Let's say you didn't invest in the stock market, but instead you put your money in a high interest savings account. Well, how much money would you have made in 10 years? Well, according to this simple savings calculator, you would have made $2,492 in interest. That's it, over 10 years. That isn't very good. It's safe, but it's not the best use of your money, in my opinion. Okay, before I wrap this video up, I just want to go over a couple of more things. So right here, I've got the 52-week high. So what that means is, over the past 52 weeks, the highest the share price has been $327.85 a share. The current price is $267.99. So that is a 22% discount from the 52-week high. So if you spent $10,000 right now and purchase shares of Apple, it's trading technically at a 22% discount. And the reason for that, as I'm sure you're aware, is because of the pandemic. Stocks have fallen. And if you look at the chart, they're slowly recovering from what was the bottom. And if you're planning on holding that stock for, the long term, as I've said in this video, then there is a very good chance that it will appreciate. I also want to point out that in this example, I've simply taken $10,000 and I've spent the whole thing. I've assumed that we're going to purchase all the shares at once. Generally, you don't want to do that. You want to purchase a little bit at a time, because as you can see in this graph, which is over just 1 year, the stocks fluctuate quite a bit. So let's say we bought shares today for $267.99. So instead of spending the entire $10,000, it's better to spend, let's say, $2,000 or $3,000 or $4,000, and then wait and then see if the price goes down. Then you want to buy some more stock, and that'll reduce the price per share. I'll go over that in a different video as well, but I just want to point that out, that generally you don't want to spend all of it at once. You can, but usually you want to purchase shares in bundles. And that's everything in this video. If you like the video, please like and subscribe. Thanks for watching my channel.